Well, let's talk about Group 5, which is a diversified construction, infrastructure, concessions and related services group.
Right, under new management, one of the, I guess you could say, laggards within the construction sector, although the construction sector in general has been rather poor. Group 5 stands out because it's actually had a nice earnings recovery, but you haven't really seen that, I don't think, in the share price.
Market cap, 2.7 billion rand, a PE ratio here of 7.3 and a dividend yield of 2.5%. Do you want to look at the graph up front? There we go. We've actually got it on screen, so that gives you a good sense of where it's come from and now hopefully in that upward trajectory.
Yeah, you know, the history of the company, it's a well-established business. It's been around for decades. And I have a history, an investment history with the business, that one of the first times I invested in Group 5 was early 2000s at 5 Rand a share. I exited at 50 Rand a share for our clients. It was a fantastic result. It led to some immediate frustration because that was in the building and construction boom, 07 into 08. Where Group 5 went on to get into the 70 rands, you know, and the question is, why did you exit at 50? And of course, it fell all the way back down into the teens. And in the last couple of years, you talk about the management restructuring. It's found its feet again.
But they've just come out with results recently. They've
just come out with results. The results are nice. There's a big write-off for a non-performing line item, non-performing client. And that's a negative in the results. It's without question, it's a negative. It's in the bank. It's or in the rearview mirror. To me, what is particularly interesting about Group 5 is that they have this this hidden gem, which is the concessions business. The concessions business is based in Eastern Europe, which is economically strong. It's a very robust cash flow business. The margins are stable. And if you NPV that concessions business, I think you can get to almost the entire market cap of Group 5.
NPV, net present value.
Sorry, net present value, yes.
One more question, sorry, Paul, and now, because I think the hat made me forget it. Go with your question.
So
you may
I
have
wanted
to take
to
it off.
ask about in these new results.
No, shall we make him take it off? Okay, you can take it off. Okay. You made me forget my question.
Now she's feeling more comfortable.
All right.
The question is, where did you get that hat?
The concessions thing, I mean, what you're saying there is that they have had these deals for a while. They've worked out that the current cash flows that they're generating and their obligations in terms of maintenance and so on. So they actually took a write-in. Interestingly, I noticed that in the results, but I didn't notice the write-off that you're talking about with regard to a non-paying client.
Yeah.
So the construction and engineering business doesn't worry you. They've got the order book of 17 billion rands. You reckon that they're going to be able to sustain margins and not have any further problems of the sort that you're picking up?
My suspicion is that Group 5 is in the business of reshaping itself, and that if we come back to this company in, let's say, 5 years' time, to be poetic, it will be overwhelmingly a European concessions business. That is just a suspicion.
My question now, I remember, is you said you got in at 5 initially, got out at 50 for your clients.
Yes.
What was your next entry point?
So we were back in the early teens in the Superdogs portfolio. The fact that it's now mid-20s,
yes.
24, 25.
It's up really nicely, and the investment, despite having done 100%, is on a 7 PE. That's undemanding.
And that's in part, I guess, because the whole sector is a little bit unloved and underappreciated.
Very low margins across the board in the construction space.
But keep in mind, and I think your point about the construction and the manufacturing part of the business, which is also, the manufacturing has done far better in recent years than historically.
Like they make pipes and
it's the
related
Everite business and
structures.
Exactly. So they have done better in recent times. But I don't think that's to me, that's not the thesis in this investment.
The concessions part of the business is
But
exciting.
surely, what I know they're also busy with, because I've got a running friend who works for them in that division, is that power generation, power engineering thing. They built a combined cycle power station for Sasol down in Secunda. They're now building a fairly significant plant in Ghana for the Ghana power utility. That's got to be a logical expansion activity for them as well, it seems.
I think so, because that is, despite it being in this low margin industry, it represents intellectual property, technology, capability, which commands higher margin and generally translates into
Harder to build.
sort of more sensible, sane business.
We've got to call it hot or not, Adrian?
No, I've given you 5 hot ones. All of them are hot.
I'm still going to go through every one. Paul, are you convinced that Group 5
Look,
is
it's not
hot?
a sector that I'm particularly enthused about, but you got to hand it to them. The
It was a
profit
convincing
turnaround's
argument.
been delivered, and it looks pretty cheap comparative to the
So,
profit.
does that translate
Yeah, let's
into
give it
a
a
hot?
hot. Yeah.